Welcome to the NGEN Markets training session. So welcome everybody. We will be starting with our session. Meanwhile, others are joining in. I hope I'm audible to everyone and my screen is visible. So today's topic is all about effective ways to compare performance of mutual fund indices and NGEN Insights, which we have currently rolled in. And we will head over to Q&A session once we are done with our session. So I hope my screen is visible to everyone so that we can if not, please let me know so that we can actually address it. Just a second, I will show my terminal. So you can write me on the chat box or either verbally if it is not visible, and I will take yeah. So accordingly, as you can see, we have this overview of the NGEN market. So I'm just gonna refresh this up to see to show you the overview here. So within overview, what you can do is what you can do is you can actually compare multiple sets of indices. Now we are going to talk about comparisons here a lot. We are going to take certain start date. So to actually use this particular set of data sets, what you need to do is you take a start date from here like 2013, you click it, and then you can see the indices starts from one particular date. Now you can compare it just by clicking on them. Now these are all general comparisons which you can do into the system, and you can also rebase it. So rebase basically means that it starts from one particular point till the end of the point. You can see which one has the highest accumulated value from the start of 2010 or 2013, whichever start date you have chosen. So this is what it looks like when I compare some Nifty and BSE indices in one single chart. Now what you can do is you can also add in more. So I'm just clicking in a couple of indices here to give you an idea that if I want to compare 4 indices, what would be the case here in the market chart here itself. Now here in this sense, if I want to compare even Indian equity sectors, that I can easily do that just by clicking on them. These are all similar functions given here. You can click and unclick on them, and you will see these sets of data sets being added into the chart. Now if you want to have those all data sets in Excel, all you need to do is click on this. So I will show you the Excel button here. It's a pretty useful function which will help you to actually come up with certain data sets which we want to compare. Now this is the way you can come up with a particular set of customized level of reports. But these data sets can be used to compare all the indices in one place. So you can see all the market levels and every single index in one single chart. It's very, very useful because you can compare any index, even Dow and Jones, into the system. Now this is the same thing you can do if I want to compare Dow and Jones. What I can do is I can click on them, Dow and Jones, Nasdaq, S&P 500. You can see the last 12 months within the market chart here, and the worst 10 sectors in the last 12 months. So all the 1 month, 3 months, 6 months, and 12 months are given here. Similarly, as you can see, there are a couple of buttons which are called as screenshots. Now these also can be used whenever you're creating some documents on the basis of customizable reports. So you can download them in a screenshot image, and that gets downloaded into the system like just like this. And then you can also compare macroeconomic data. So we haven't talked about macroeconomic data in previous sessions. Here in this case, you can actually check the historicals of any particular data sets. So let's say you check on history, you can even download that in Excel. Now this is very, very useful because you can actually download it and use that data sets for for the 10-year government bond. You can take it as a Excel format, so you can see these are the data sets given in the Excel. Plus these are all downloadable. All you need to do is just click on this button. So a very simple thing, you can actually go to any history of any particular data sets of India, you click on it, and you can download them in Excel in a conclusive manner. And that's how this works out. And plus one important thing here is that the entire overview can be wrapped in one single chart. So whatever I have chosen here, any particular index or charts, that actually can be added into the market wrap. So you can see this is what the market wrap looks like. And within market wrap, you can see these are the couple of indices which we have added. These are the macro data which we have chosen for India. and these are the sectoral performance and the world equity markets performance. So that is, that is how this essentially works out. And going back, you can also compare macro data. To compare them, these are the buttons. So you can click on this balance of trade and you can, easily compare them, just like, you know uh, the inflation rate or the interest rate, that you can easily compare. Now here is this case where you can actually, use all these data sets to create your own insightful reports. We will talk about the insightful reports later on, but you can also make comparisons of indices in another tab called compare. Now how do you do that? You can just directly head on to the compare section, because here you can actually add in a couple of indices, just like, nifty 50, nifty 100, and 500, all in one place. Now you can do all the comparative analysis of these indices in one single shot. We are going to go through this, and you can also save this as a list. So to save it as a list, all you need to do is click on this my list. You just uh, get into the which indices you have added. So you can even save as indices, you can save as, all the, ETFs. So you can see I've added some nifty indices here, 18. So you can click on it, and all the indexes of nifty, which are sectoral indices, are added into the system. Now it's a pretty good way to actually check all the index in one single shot, and you can compare the data sets here. So the 1 year, 2 year, 3 year, 5 year, every single data set. So these are all return columns, and these return columns are having their own particular start date. So here you can change the start date as well, because every start date here which starts is since inception of each indices. You can see this, these are the age, and these are the data sets since inception. So to have it a singular start date, all you need to do is just click on this, settings button, keep an inception date, come back and add in any particular date, and from that particular data sets, that date, the entire data set will be added. So this is how this looks like. You can see the CAGR, the standard deviation, all are starting from one particular start date, which is 3rd October 2016. Similarly for the relative column. Now the relative column is a, a parameter which will help you to take a decision based on relative basis. Let's say I want to compare with MNC with, Nifty TRI. I can do that. Now in a relative sense, this is more used when you're adding some couple of funds, right? You can even calculate this. Once you calculate it, you can see the cumulative excess return, the annual excess return, the beta, the tracking error, the info, and the correlation. And even in here, you can see the annual excess return over the benchmark, which is an alpha. And this is the cumulative excess return over the benchmark. So the benchmark can be changed from here. All you need to do is check the benchmark from here, just like, if you choose Nifty mid cap, that can be changed. If you choose, any particular benchmark here, that can also be changed, and you can also change the start date. So any particular start date can be changed here. I'm just going this through so that the basics are covered. And here, what you can do is you can essentially keep any particular securities here to do the relative comparisons. So for an example, if I add in only mid cap funds, I can easily do that. I can save it as a list. And then what I can do is I can keep a relative column as Nifty mid cap, and I can see these are the funds which has created, this is the one fund which has created positive annual excess return over the benchmark in this particular set of period. So 2020 till today. So that is how the relative columns works out. And you will generally see your system something like this. If you see something like this, all you need to do is calculate it, because it saves your time to look towards other parameters, and you can easily click on it, and certainly you will calculate it, and you will see the data sets. And all the data sets which are added into the system, you can even export it in a CSV format. And here we have the holdings column, which is in blue, is also another column which will help you to understand the composition of the mutual funds you've added within large cap, mid cap, small cap. And if you have added some debt securities, then you can also see the net YTM, and other particular parameters in one single shot. And that is what the main list is all about. uh, you know uh, it's pretty useful that you can take this in an Excel format, and I will show you the Excel format in one single shot. And also within Excel, all the data sets will be onboarded. So whatever you have selected in the funds with the ISIN numbers, you can see these are the ISIN numbers, amphi code, everything is added in the data sets. right? Now this is one data sets you can add. Another thing what you can do is you can also select and hide columns. Now this is going to be useful if you do not want couple of columns to be visible. So you can actually click on this button, show and hide columns, and whatever you want to actually see on the data sets will be shown into the system just like this. And it's pretty useful because it will give you a conclusive sense that you want to look towards only 5 years, 7 years, and only 1 to 5 years returns, not 7 to 15 years return, as vice versa. So you can take a decision on this, and you can actually show and hide columns accordingly. Now this is the main list. Now another thing is rolling analysis. So we are going to talk about rolling analysis a bit. In rolling analysis, you can actually take a decision not on the basis of point to point, but on the rolling basis. So if you click on this, right, you can actually run through a simulation of rolling 1 260 days rolling period every single day till the end of the 28th October 2022. So this start date can be changed. You can change it to 2010. Let's say we are taking a consideration of 10 years rolling analysis. We click run, and approximately 10 years, and we select the methodology as simple returns. So whenever we are taking a look into it, every single data points shows you the sum of the previous 260 days daily returns. So this 260 days is 1 year, one working period in a year. You can change it to 520 for 2 years, and you can also change it to 780 for 3 years. Now this will be annualized. You can even make it absolute. On the basis of methodology you choose, you will see the average. So the highest average in this case is by Kotak Emerging Equity. And you can also review a couple of data sets here, like the average. This average actually shows you the average of the all data sets, all the simulations of the rolling analysis for every single day for 2 years period, right? And you can also see the volatility. So the volatility, which is actually the volatility of this entire graph. So this entire graph which you're seeing here is the volatility of these funds which have been simulated. And the high, it shows you there's a period where the rolling return of 520 was on an annualized basis was highest, which is with UTI mid cap. And then we have low, which is a period which has the lowest return, and the range. Range is just an absolute difference between the high and low. So if we want to know that, what was the maxima of a fund achieved on an annualized basis for a 2-year period, that is the maxima, and this is the minima, right? So, and then you can actually take a look towards positive percentage. Now positive percentage is very useful. It shows you the rolling periods, every daily rolling periods, how many percentage of the rolling period are in positive, more than 0%. You can actually simulate this just by adding it here. I'm just showing you an example here. You can just click in on 0, and you can just make this as maybe 300% return or 3000% return, and you will see these are the positive percentage, and that actually matches up because this is 0 and this is actually a maxima. It can be infinity. And here you can see that these funds, one of the fund is actually having the highest positive percentage. And this is how you can not just for funds but even for index. So we have talked about index. We are going to toggle around some indices and funds. But if we compare index and let's say Nifty mid cap 100, and do the rolling analysis on that, you can easily see this is what the analytics is for the rolling window. This is what the positive percentage is. Nifty 50 is actually having the highest positive percentage in this case. And the second one is HDFC mid cap opportunities. Now this, you can change it for a day period and you can see if those positive percentage changes or not, right? And this you can do for a couple of periods, so to check if it is making sense or not. And that is also downloadable in Excel. So if you want this data set in Excel, it is also downloadable. And you can what you can do is you can just open it properly, and you can use that data sets for your own customizable report. Now I'm talking about customizable report, but we do have a PowerPoint which actually adds in more flexibility for you to make reports in a conclusive manner. I'll show you the PowerPoint once I go through this all parameters. Another one is the distribution which we talked about. So distribution is another thing which you can take a consideration, that if those periods, like those data points, like these are the these are the return periods, like 8% till 7%, till let's say 8 to 10%. So what are the frequency between 8 to 10%? So in this, how it is distributed, you can actually check that. And once it is done, you can actually see the data sets added into the system. So just a second, you can see these are the data sets, and essentially Nifty 50 is actually having more frequency between 8 to 10%. Now this you can check for every single intervals. So you can see this for 7 to 23%. You can change it as per needed. And here we have given the entire rolling return distribution downloadable in Excel as well. So I'm just showing you the Excel downloadable function, which you can actually download it, this entire data sets with the distribution frequency you have chosen. So that's how this interval you have chosen. And we also have another set of PNG report. You can actually download this image, print the chart, and download the PDF if you want for the rolling analysis. So this is the rolling analysis, which will effectively help you to compare certain sets of mutual funds in one category, or multiple categories as well, if you are adding those categories into the system. Then we have calendar years, which gives you an idea that if you have a couple of scenarios, like 2018 only Nifty was positive in this case, and in 2016 mid cap opportunities was the best performing fund in this list against the indices as well. And you can also download these in Excel. So a pretty useful way to check. And these 2022 shows you the YTD returns year to date, which gives you an idea that till today this is what the returns it has been for HDFC mid cap opportunities. This you can add any particular securities in the main list to again simulate the yearly return calendar. And that is how this data sets looks like. Now we also have monthly SIPs for even indices, because you can even compare some if you have SIP strategies and you want more funds to be added, right? So you can even add couple of funds. So I will add another list here, which will take into consideration 2024 funds into the system. And in this list, what you can do is you can actually run a, a basic a monthly SIP analysis. So here an in-depth analysis of SIP you can actually take a look towards by changing the data sets, like uh, from the start date of 2017. You click on this, you run the SIP, and you can see the XIRR. So highest XIRR is by PGM India mid cap opportunities. You can run the SIP. This is the installment we have, like 10,000. If you choose the installment, you can run it. And you can also download this entire data sets of XIRR and final value in Excel. Now this is useful because if you sort it in as a descending order, you can actually download this in Excel. And you can use this data set as well. I mean, this is a pretty much of a good way to see that between these dates, you can see the monthly SIP from this particular date with the 10,000. This is the XRR, and this is the final value. So a useful way to actually see all the funds in place within Excel with the final value, which can be used for your own customized report. And the next part is actually the risk versus return. So even in the risk versus return, there's another way. What you can do is, it is a relative column, by the way, relative in the sense that whenever we are checking the list, some of the funds will be always in the high risk high return due to the relativeness of the entire securities we are having into this list. Like for an example, if you're checking Axis, SBI, and Axis mid cap, you can just zoom it in, and you can see in the relative sense of these three, SBI is actually the highly risky against Axis small cap. You reset the zoom, you will see all the funds in the place. So it is pretty relative. You can actually zoom it in. It's another function which you can use. I mean, sometimes what you need to do is, if you want to remove Parag Parekh and just want to review this 4 or 5 funds, you do not have to go back to the main list. All you need to do is just check it through this, because in this case it will just relatively show you that Axis is the lesser riskier, whereas this is more riskier as per standard deviation and the annualized return. You can also change this, because this is point to point. So change it as 2019. You click on go, and you can see all the data sets added as risk versus return. Now we also have positional overlap. So positional overlap is one way where you can actually click on whenever you have a portfolios. So whenever we do funds comparisons, or we are coming up with a portfolio, let's say we are coming up with certain set of portfolio like this, you can easily add an RTA client or a portfolio client directly from here. You click on it and you can review a portfolio based on positional overlap. Now, if within positional overlap, we have given a certain set of functionalities, like you click on this, and you can see this is these are the these are the funds the client holds, and this is what the high position overlap is, like 60% of it between Kotak standard multi-cap versus Kotak equity opportunities. You can click on this 60% and you can see the overlap here into the system. And this is what it looks like accordingly. Whenever you see the overlap, you can download this in Excel as well. And we also have overlapping positions, which is minimum common holdings. So if you have 5 funds, which includes all the funds, like all the equities like ICICI, it will show you minimum common holdings as ICICI Bank or HDFC if every single fund holds ICICI in the list. So that way you can understand that the 3 or the 2 securities exposure inside the funds will have some exposures there. So that is one thing you can take a look towards within position overlap. And another useful thing is that if you feel one of them should be removed, what you can do is you can check which one is favorable to be removed, by checking rolling analysis, or either via checking risk and return. And if you feel one of them should be removed, all you need to do is go back to the main list and remove one of them. So let's say Kotak equity opportunities is removed. And if it is removed, you can see in the position overlap, it is now negated. The 71%, 70% is now gone. And you can see other positional overlap, which you can deal with. So this is how you can use position overlap for effective diversification. This is also downloadable as a data in Excel, which you can use. And we have also got correlation, because correlation gives you an idea that if you're working towards within the last 5 years or 4 years, then how the behavior of the assets has been from the last 4 years. So you can easily see that Kotak standard multi-cap versus Aditya Birla Sun Life active equity is actually having a very high correlation, like 0.97. And in this case, what you can do is you can either go with one of them and remove one of them from the list. Easy removal is possible from the main list. Once it is done, you can either remove it from the list, and that is done. So effectively you can use position overlap and correlation in one single tab while comparing funds of even a portfolio level. If you add some portfolios into the list, or even number of stock, a number of funds, if they're added by one single categories. And here we have gotten a performance chart, so you can view the performance chart on a point to point basis, uh, which actually you can click on it, click go, and you can see the performance of the entire funds, where you can compare. And then we have got some scenario analysis. Now this is point to point, which actually is a scenario. Like for an example, if you're talking about 2016 demonetization, you can actually choose a date of 2016, from July till 1 month or something like that. And you can run the return analysis on the absolute or an annualized sense. So this pretty much sums it that you can actually make 5 sets of scenarios for any particular data sets chosen. So if you choose it 2003, any data sets which is available will be shown into the system for you. So this is effectively is downloadable in Excel. When you download this in Excel, you will see all the 5 data sets with absolute or analyze, whichever you have chosen, can be downloaded. So you can save this data sets as as an Excel. I will just show you the Excel here, because this is very useful if you want to make a particular sense of customizable report by using this data sets. So here you can use one of the data, and effectively that data sets can be used in the customizable report. Then we also have the bulk download. So bulk download is all the funds which we have added into the system can be downloaded in Excel with current holdings. So if you're comparing the funds, if you want to download them, all the holdings in Excel, that can be doable pretty easily into the system. And this is what it looks like. Another thing is the last 12 months. So last 12 months is the average best, worst, and annual volatility of the monthly returns of every single asset. So these are all the funds and the monthly returns of the last 12 months, and what has been the average of those monthly returns, what has been the best monthly return and the worst monthly return and the annual volatility of the entire uh, mutual fund which you have added into the system. Now this will pretty much help you to understand, not just for even funds, you can even add stocks and check the last 12 months return. I'll just show you again, like if you add in a stock, let's say a list of stock here, you can even do the same thing for for what we have done for the mutual funds. So all the stocks has been added into the system, and if you check the last 12 months, you will see the returns of those stocks for the last 12 months, and the average return, the best return, and the annual volatility of the stocks as well. A pretty useful way to save a list. The recommendation would be to save a list as much as possible, so that you can toggle around couple of list of stocks and funds and your own strategies in one place. If you're satisfied with one strategy, you can actually make a PowerPoint out of it. So I'll just show you the PowerPoint in a moment. A PowerPoint report can be generated for any category you add, any index you add into the system, and it is a comparative report which can also be used as a proper pitch book. So just a second, I'll just show you in a moment. Yeah, so once you click on this PowerPoint button, it calculates all the charts and everything in one single shot, and gives you all the whatever we have explored in the compare section in one single sheet of one single PowerPoint report, which is also co-branded. So you can actually take a look towards this. I will just show you the PowerPoint report here, and it is pretty useful because this is all customizable. Every single data sets we have shown here. So I hope this is visible. I'll just share it again. Yes, okay. So here you can see the comparison report, the the list of all the uh, funds added into the system, the categories, the type of the funds, and everything which we have shown before is also there in the PowerPoint. So the risk versus return is added, all customized with the list. We have the latest holding statistics of mutual funds. We also have the holdings overlap for the mutual funds in comparison report, and we also have the the entire performance sets with the 1 year till 15 years return set. So these are all from 2022 2013. You can check it all. You can see the positive percentage. We have talked about rolling analysis before, so every single thing is actually narrated here. And whatever we have chosen, like for an example, we have chosen 520 days as a rolling window, that is actually added into the PowerPoint. So whatever you choose to have in the rolling analysis or risk and return, that will be shown in the PowerPoint into the system. And that is how this effectively works out. And not just for funds, any index added, I'll just show you an example here. Any index, list of index added, you can also make a PowerPoint of the same, or even a stock. So if I just add in a Nifty index here and compare it into the system, uh, all the indices added into the system uh, are easily comparable, first of all, and you can make a PowerPoint out of it, just similar to what we have done for us, a mutual fund level list. So this is where you can compare a particular set of securities into the compare section. I'll just show you this PowerPoint once it gets generated. And this is how this works out. Now we are going to jump through a couple of new updates we have. One is the insights. So I'll just show you the PowerPoint in a moment, just a second. Yeah, so this is the comparison report we have. And in the comparison report, if you can see, these are all indices. So I hope it is visible to everyone. And here you can see all the data sets of risk and return, and all the data sets of the performances, even the 5-year performances. So this is 5-year because we have chosen a particular start date into the system, and the calendar years, and the rolling returns as well. So a pretty useful function, a very uh, customizable report you can generate through the PowerPoint just by editing it. So you can change the colors and all the formats, and accordingly you can use it for a proper prospective client, if you're using some funds rather than indices. So now next we are going to head into the insights. So insights are those a new function we are having. What you can see is, you can see multiple sets of insights of categories like general returns. So if I just show you the general categories, which will show you all the index and the performance of the market, and you can just check the return categories. So these are all frequently updated. You can also see the holdings as well. So holdings like top 5 sectors invested in equity mutual funds. So if you click on one of them, like for an example, this one, You can see this is the insights, what you can download it, and you can save it into the system, all shareable with the client in any medium possible. So this is frequently updated. You can use it any particular, you can refresh it, and you will get the notification once the insights are added. And you can see it for any particular categories into the system. So like for debt, if you have some if you have some insights, you will see the insights for debt as well. And the if I remove the general, you will see the debt insights. So these are all insights which you can use it, and all of them are here added. So you can just explore it from the insight section we have added into the system. You can click on them and you can see the insights here being added with the particular data sets, and all the data sets added as NGEN Markets Insights. So this is all about insights. And one thing which we have shown you is all the data sets which we have shown you in the compare section are actually being used in the insights. You can see some of the parameters like this one, like for an example, I will show you another parameter like returns. These are all used through compare section by an Excel. So it's pretty useful because all the data sets used through NGEN Markets, you can effectively make such an insightful reports with your own customizable reports altogether, and you can also use them. So that is all about this. We can start with the Q&A altogether. If you have any questions, we can start with the Q&A.
Sir, I have two doubts, sir.
Yeah, please go ahead.
Yeah. First question is in compare section. That is the rolling analysis data. What you shared is an average return of 260 days or the 10 years average returns.
Yes, sure. So, Umair, can you go to the compare section and the rolling section, please?
Analysis.
Yeah. So here, okay. So basically, first, when we do this rolling analysis, what you see in front of you right now is we've taken every single 52-day period in the past and shown and basically shown it to you on the right. Now, on the left, when you see this table, this average column, this is the average of all the 520-day periods in this time period, 2011 to 2022. So this is the average 2-year return, effectively. So now here, if you get something that has a higher average 2-year return, then obviously that has performed better. So this particular number shows you the average 520-day return.
Is 520 days for last 2 years or last 10 years?
No, so last 10 years. And the way this happens is, so Umair, just take your mouse right at the beginning of the chart, just right at the start. You can see one of the earliest dates is 4th September 2013. Now, on top, you can see the start date is actually 2011. But the reason the first data point is 2013 is that's the first time we can get 520 working days. So first data point is 4th September 2013, where we look back for 520 days, calculate the return for that period, and then that return happens to be 25.44, as you can see. Then we go to 5th September. Then we look back again, calculate the return, and show it here. And so on for every single day from 2013 onwards. So when go ahead.
In this chart, we can see that last 2 years rolling returns.
Yes.
But in left side, the average return column has a doubt how to calculate.
So the average return is quite useful because this tells you, let's look at Nifty IT. So Nifty IT on average for a 2-year period gives you 19%, 18.96%, right? So over the last 10 years, Nifty IT has given a almost 19% return on average for a 2-year period. So this can be your return expectation for a 2-year investment into Nifty IT, because that's the average that has come.
This means that last 2 years average return.
Not last 2 years. It is the average of all the 2-year periods since the last 10 years.
Okay.
And 10, why am I saying 10? Because on the, you can see just above that, the start date and end date. are for approximately 10, I think 11 years. That is a time period that you select the time period.
Okay, maximum rolling window date is 1,300 or anything.
Well, you see, the thing is, we have not put any such limit. I believe there's a similar, same question on the chat also. We have not put such a limit, but if you run it, you'll see the chart data will get smaller. Why? Because if you need 1,300 data points to, now you see this data is only starting from 2016. So, he's done 1,300. What is that? 5 years? Yeah. So 5 years. Now this is 5-year only, right? Now, and you can see, obviously, we can only start the analysis from 2016 because you've given start date up on the top 2011. So first 5 years we need just for the first data point, right? And then after that, every single day we will have 5 years behind. So now, if you look at the average column, that is the average 5-year return of each of these sectors.
Okay.
And then even more interestingly, you get high and low. What is the best 5-year return? What is the worst 5-year return, right? Then you see the range. The range is basically the, how the distance between the high and low, which basically means, how much can it vary. And the final column, which we find extremely useful, is that, and in fact, we use it for, to create strategies also, which is a section that will be coming soon. This basically shows you what is the number or percentage of all these 5-year periods that were above 0. So you can see, for example, some of these sectors, services sector, MNC, for a 5-year period, they've always made money. They've never lost money.
Okay. So the next question is, in years column, the values of the calendar year means, the period of calendar year means June to December or March to March?
No. So that would be financial year. These are calendar years. So this is 1st Jan to 31st December. And to be exact, we count the start price as the closing price of 31st December of the previous year. And the end price is the closing price of 31st December of the current year.
That means the calendar year value returns.
Yes.
Okay.
Yes.
The next question is, correlations value is what's maximum values is eligible? That is,
look, I mean, correlation is a very relative topic. So in one case, 0.97 will be a horribly high correlation. In another case, 0.97 could be acceptable. So the thing is, it all depends on the context, all depends on what you're doing. So here, for example, this is a nice picture because you can see these are all the sectors in Nifty. Now, so that's that you can basically, this gives you an idea of how the sectors are related to each other within Nifty. So within the Nifty different sectors. So here, for example, when you see really high numbers like 0.98 or 0.97, so may I just focus on any of the really high ones? Just pick anything. Yeah. Okay. So there you go. So this makes sense. Nifty Financial Services and Nifty Bank are very highly correlated to each other, right? And that's obvious, right? And what is the 0.98 before that? Yeah, this one. So bank and private bank, again, you can understand why they are highly correlated. And let's pick a low correlation one, like one of the 0.3s or something. Yeah, 0.23. So FMCG and IT has hardly anything in common. They are quite different. So this actually gives you a pretty nice understanding of the kind of relationship between different sectors. Umair, as we're talking, this may not be a bad idea for an insight. So now when you're comparing mutual funds, for example, if you put all large cap funds together, you might find that the correlations are very high. So this is something that's quite relative. I mean, it depends on what you're doing.
Hi, I have something to ask. Am I audible?
Yeah, go ahead.
Yeah. The thing is that I'm not being able to add my ARN number such that I can, load all my clients automatically to NGEN and, view their portfolios for comparing or whatever my use would be. So I'm not being able to, add in my ARN number. That's my main problem.
Understand. So that's actually, that's not something that you can do on the system itself. If you just write an email to support@ngenresearch.com, our
Okay.
RTA team will contact you the very same day. They will need to take
Okay.
certain details because we have to obviously order the right files from CAMS and Carvi. And it takes about a day or two, and after that you should be set up. And once you're set up, you can basically head to the client section where you will see that your client data has been.
All right. So I need to mail you in support. Where is the mail ID?
Yes, support@ngenresearch.com. We put the email address on the chat as well.
Yeah. Okay. Got it. Okay. Acha, another thing is that when I'm seeing this in the portfolio section, from clients, in case I'm selecting a client, there, in the, options are coming like asset allocation, performance, contribution, those are coming, right?
Yeah.
Yeah. So could you please tell me that when I'm clicking on the performance tab,
Yeah.
there on the chart that is showing, it is showing something called rebased price.
Yes.
Yeah. So could you tell me the meaning of that?
Sure. So basically what we've done is we've created a synthetic line to represent your portfolio's return, which is shown in blue. And it's being compared to a benchmark. Now, obviously the values, the actual values of these indices would be very different. For example, the synthetic index that we create to show your portfolio price series, it basically starts at 100. But Umair, let's just change the benchmark to Nifty or something, so it'll become clear. So if we're looking at Nifty TRI, the value of Nifty TRI will be something which will be very different from the value of his portfolio price. So the reason we rebase it is so that you can actually look at a chart on a relative basis. So what we do is we basically put both of these things, we force them to be start at a price of 100, but then they grow exactly in the same way that they have grown, so that we can put them together. It's basically exactly the same thing that's shown in the market section. Just let's go there quickly and show. So here, for example, there's a rebase icon here. So when we unrebase it, which is not an option that's there in the performance tab. So let's stay in unrebased. You can see you can't really compare anything. I mean, the pink line over there, which I think is Nifty Finance or FMCG, is down there, but the orange and the red line is right at the bottom. Now, as soon as you rebase it, you'll see they all start at the same point, and then we see the actual divergence between them.
Okay, got it. Okay, okay. Thank you so much.
No problem.
Are there any other questions?
Arunabji, one suggestion which you need to be implemented, that was that in dynamic asset allocation, whenever we see the category, you were supposed to update it by showing net equity exposure. Still, it has not been updated.
Yes, sir. So this was actually there. So we put this into our list of items. So it will definitely get done. Currently, if you want to see net equity, you obviously, as you know, you can click on the fund itself. And when you load a fund individually, that information is shown. So we're going to be adding it to our backend stats. These stats, the stats that you see in the compare section are calculated in the backend. So we just need to, it's in the list of things that are, being worked on. So it will, definitely get done.
Right. We need to, go one by one. Here we get an overall view for it.
Yes, absolutely. Understand.
This insight section is very good. I just wanted to say that if you can add co-branded also.
Yes, sir. We've had actually, yeah, you're right. I mean, we've had many different questions. Actually, so sorry, I meant we've had the same question from many of our users. At this point, we're basically focusing on, making sure that we are able to give you, useful and meaningful insights that you can use for your own self or for your clients. So, in terms of white labeling and co-branding, because these are images, the way our system works, manipulating the image to kind of insert your logo it's quite a technical challenge. So at this point, we're not, we'll try to see what can be done. But at this point, it's not really available, on our side yet.
Okay, done.
Sir, in selection of funds, what is the advisable value of correlation of two funds? So what's the maximum limit we have to choose for up to point?
Yeah, so, as I said before, I mean, this really depends. If you've got a, it depends what you've got. If you've got a portfolio, for example, with various different funds, some large, some small, some value funds, some other type of funds, some debt funds, then, a number like 0.98, 0.97 is quite high. And, that is, problematic. You should probably not have something like that. It's not going to cause you any problems, but it's certainly not, you're certainly not deriving any benefit from having two funds which are basically doing the same thing. Now, having said that, if you have a portfolio of only large cap funds, then that 0.9798 will not work, because everything will be very high, 0.96, 0.9798, something like that. So there, if you start reducing funds based on correlation, you will have to take out everything. So, but if you look at a diversified portfolio, which is made up of various different types of funds, then, above 0.95 is something that you should definitely investigate and maybe try to replace with something else. One more thing I will also add to this: if you see a high correlation, let's just take a simple example here. Let's pick a 0.94. So Nippon India small cap and DSP small cap. You see this, then you quickly go to the position overlaps. The prices are moving together, but what about the underlying holdings? So let's find the same pair. Yeah, this is the same pair. Okay. You can see the underlying holdings are not very overlapping. So this is okay. So you could use this method to say that, fine, the prices are moving together. Maybe that's because there's contagion in the market. Everything is doing, all stocks are moving together, up one day, down together, the next day, up again together the next day. If that kind of price action happens, all stocks will show very high correlation to each other. But position overlap is one thing that clearly tells you that these two funds are doing some very different things. Only 12% of their portfolio is the same. So in this case, maybe you let that high correlation be, right? Because it's not that bad. So you can also cross-check with position overlap.
Okay, sir.
Thank you.
So in my client session, for some clients' portfolio, some funds are missing in portfolio sessions. What I do to conduct your support system?
Yeah, sorry, I missed that. Could you repeat your question, please?
In client section, I am downloading some client's portfolio.
Yes.
2 or 3 funds are missing in that portfolio.
Okay. Okay, is this the RTA in the RTA connection tab in this one?
Yeah.
Okay, so if you find that 2 or 3 funds are missing, sometimes what happens is CAMS and Carvi sends us these files with the reports, and that is the report that we use to upload this data. But CAMS and Carvi, unfortunately, instead of using ISINs, most of these reports have what they call a product code, and these have to be updated on a periodic basis. So sometimes if you find missing funds, just write an email to support@ngenresearch.com. Tell us the name of the client. Tell us that maybe these 2-3 funds are missing, and we will check up. Sometimes what happens is they've changed the product code, and because of that, it's not matching and it doesn't get uploaded. But if you can see that in your back office system and you don't see it here, just write us an email and we'll update it. And after that, you won't get a problem with those funds available.
Okay, sir. Thank you.
Thank you.
Hi, Arun.
Hello, sir.
Yeah, just a request once again, to get that direct mentioning.
We just saw it, sir. I mean, I can tell you right now, Carvi is basically done, right? And you will see it updating this week also. The only pending item is the CAMS file, which actually is working fine. It's just working fine manually. We just need to automate the process. Apologies for the delay, but it should be done this weekend for sure. And your RTA data should be updated. I'll just write you an email separately.
All right. Okay. Thank you.
Just for the benefit of others, what we were just talking about was integrating RTA data for RIAs as well, because right now we're only doing it for MFDs, but we are just in a matter of few days, we will also be doing it for RIAs. Are there any more questions? Okay, so if nothing else, then